Welcome to the Safe Money Retirement Show with your host, Tim Wood. Tim is a retirement and income specialist, certified financial fiduciary, and the founder of SafeMoneyRetirement.com. Tim primarily serves Western North Carolina, East Tennessee, and Southwest Virginia, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Wood is a licensed life insurance professional in multiple states and specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies using life, health, long-term care, and annuity insurance products. And now, here to talk with you about securing your retirement, your host, Tim Wood.
Welcome to the Safe Money Retirement Show. I'm Tim Wood, an asset and retirement protection and guaranteed income specialist. Are your retirement plan dollars protected from any potential future bank collapses? We saw some things happen last year in the banks, and we're starting to hear rumors of potential things happening this year. Are your dollars in your 401k, your IRA, your TSP, whatever kind of plans you have in, are those dollars protected? Well, we're going to discuss that. But first, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, you need to get your own copy. It's going to explain how you can take all of the market risk completely out of your retirement accounts and protect them with major top-rated life insurance companies that offer either guaranteed income plans, long-term care plans, plans with different types of growth with no risk of market loss. It's going to explain how all of those work and how it can work for you. So just give us a call to get your free copy, 844-905-SAFE. That's 844-905-7233. So now let's get into what would happen with bank failures. How is it going to work, and how is it all going to play with the FDIC and everything? So with all of the things that are happening, it is one of the questions that I get all the time. What's going to happen to my 401k? And I'm just going to use 401k as a general term. It's the same thing, whether it's 401k, IRA, 403b, TSP, whatever you've got. It's all the same, basically. Essentially, the answer to that question is, well, maybe. I hate to put it that way, but it's something that we have to look at individually. The FDIC insures up to $250,000 in deposits per depositor, but there are investments that are not protected. Now, here's the list of what's not protected: stock investments, bond investments, mutual funds, crypto assets, life insurance policies, annuities, municipal securities, safe deposit boxes or their contents, and U.S. Treasury bills, bonds, or notes. All of those are not covered by the FDIC. Now, there's also a very good chance that your retirement account may not be in a bank that's covered by the FDIC. Again, that's something that we would have to look at individually for each one of you and figure out where exactly is your money that you've saved. Is it in a bank type account? Is it in the market? Is it, wherever it is, we can determine, and then we can answer. Most 401k plans are not usually backed by insurance, including the Federal Deposit Insurance Corporation, or FDIC. It only covers what they call deposit accounts. So that means if you're in stocks, bonds, mutual funds, any of that, those are not covered against losing value. Now, the FDIC does cover money market accounts. And in some of you in your retirement plans, you do have money market accounts. For example, let's say you had a $1 million complete IRA and you've got 25% of that in a money market. Well, that's $250,000. That's the maximum that the FDIC will protect. And as long as that $250,000 is in a money market that is in an FDIC insured type of account, then that 250 is protected. So again, it really depends on the terms of how everything is set up and exactly where your money is. But the only thing that the FDIC covers are bank type accounts that are depository accounts. So again, anything in the market, stocks, bonds, mutual funds, any of that kind of stuff, that is not covered by the FDIC. So what we need to do is you need to sit down and figure out essentially who is the custodian of your money. Who's got your money right now? If it is in a bank, and if it's in a bank type product, then you need to make sure that you don't have more than $250,000 per depositor per bank. So for example, let's say you had two $250,000 CDs, well, it would be smart to have one with one institution and one with another, because only 250 would be covered with the only one of them would be covered if you did it in the same bank. So it makes sense to smartly spread things out. So again, that's the difference. It only covers accounts that are bank type accounts, depository accounts. Now, what can you do to protect your money, no matter what it's in? 401, IRA, 403, TSP, doesn't matter. What can you do to protect that money against market loss and not have to worry about banks as well? Well, that's one of the things that I work with my clients on, is protecting that money with top A-rated life insurance companies, some that have been around for more than 100 years, that have weathered the storms of the past and should continue to weather the storms moving forward, and put that money with them after we determine what the purpose of the money is, and put them into some sort of a guaranteed income annuity that's going to pay them a guaranteed income that can never be outlived, can be for you and your spouse. Or we move them into a type of plan that has growth with no losses. Do you want fixed growth or do you want market indexed growth? There's a lot of different options there. Or we move them into an asset-based product that covers long-term care or life insurance. Or there's a lot of different avenues that we could go down. But it really depends on what your specific needs are. But getting that money away from the market risk and away from ever having to worry about anything happening in the market is really a very smart move. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood, reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Tim Wood now for your complimentary Safe Money Retirement Book and Information Kit at 844-905-SAFE. That's 844-905-7233. You can also contact Tim at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice. Have you recently changed jobs and now you have a 401k or another retirement account you don't want to expose to the risk of market loss? You have worked too hard to leave your retirement to chance. Since you will probably start another retirement account at your new job, why not ensure your old account provides you principal protection, the opportunity to participate in the market with locked-in accumulation, and a guaranteed lifetime income? We can help you roll over the retirement account from your previous employer and identify products that provide the potential of index-linked credited interest while limiting market risk. Did you know that if you're age 59 and a half, you may be able to move money out of your employer plan even if you're still working there? Call us now and ask about bonus options on your retirement money with a fixed indexed annuity. Imagine putting your money on an elevator that only goes up. It might stop on a few floors along the way when the market index goes down, but you won't go back to visit the lower floors. Our phone number is 844-905-SAFE. That's 844-905-7233. You can get your complimentary Safe Money Retirement Information Kit by calling us now. That number again is 844-905-SAFE. That's 844-905-7233.